All right, thank you so much, DB. Well, it's Money Monday, and today we are talking credit cards. Now, according to the Federal Reserve, balances in the U.S. rose to $1.14 trillion in the second quarter, and in December of last year, among households that had credit card debt, the average amount, y'all, $21,367. So this morning we are on your side with Jana Morrison for a closer look at how we can tackle credit card debt. And she is with Burkett Financial Services. Thank you for joining us this morning.
Thank you for having me.
Okay, credit cards, so many people have them. And it can get a lot of folks in some trouble because, you know, a lot of folks are like, hey, listen, I'll just put it on my credit card. But also credit cards can be a good thing. So can you talk to us about when it is good to use a credit card?
You know, you can't really make it in this world a lot without credit cards because you need them for so many reasons. But it's good for buyer protection. Sometimes it's offered, you get more warranties if you use credit cards with the things that you buy. Fraud protection, that's a big thing because there's some protections if you use credit card and there's fraudulent activity. You have more leeway as to getting out of the charges if you charge it to a credit card versus a debit card.
Very true.
You still have some protection with a debit card, but it's better for credit cards.
Yeah, I can tell you firsthand when I have had somebody take some of my money, right? It's been so much easier to get it back on a credit card versus a debit card. Now, what are some signs that you might need to press pause when it comes to using that credit card?
If your balance gets really large and you can't pay it off every month, then you probably need to take a look at it and decide, go through your budget again and look and see where you're spending because there may be your income may be not quite large enough to cover all of your expenses that you're paying. So you may need to go through your expenses and maybe cut out some things that aren't necessities because, you know, with interest rates being so high on credit cards, it's 24.92%, so that's pretty high.
Wow, that's so high.
So you really don't want to pay that, and unless it's an emergency or unless you can pay it off at the end of the month.
Okay, and then for our folks who are like, all right, so I already have gotten to a place where my credit card bill is too high. How do we tackle it? What are some strategies?
Some strategies, you want to pay more than the minimum payment because the minimum payment it'll make the balance last forever. Automate your payments. So let's say you want to pay $50 a month or whatever it is. Just automate it so you don't have to actually make that payment on purpose. It just automatically does it. Also, there's a technique called a debt snowball, and what that means is pay off the lowest credit card that you have, and just tackle the debt. Pay the lowest one off, and then pay the next lowest one off until you get them all paid off. Another technique is a little different. It's called a debt avalanche, and what that means is you pay off the credit card that has the highest interest rate. Even if it might be the largest balance or the middle-sized balance, you just look at that interest rate. So there's a lot of different techniques that you can use if you have more manageable debt. It's still high, but more manageable.
Okay, that's some good information there. And then finally, too, there's credit counseling that's available. We'll put that information on our website. Jana, thank you so much for joining us this morning.
Thank you so much.
All right, my friends, on the other side of this quick break, the top 3 things you need to know happening around the world. Stay with us.